Hi, my name is Danielle Wiggins. I'm a junior here at Lamar University, and I'm studying nutrition. Today, I'm going to talk to you a little bit about the credit card industry. The credit card industry is growing every day. Some of the things that I'd like to talk to you about is what is a credit card? How do the credit card companies make their money? College students and credit cards, and tips on how to keep your credit balance low. So what is a credit card? A credit card is a small plastic card looking very similar to your debit card that allows you to borrow money from a bank or a business and pay back the balance each month. MasterCard claims that the first bank credit card was called Charge It. Charge It was introduced in 1946 by John Biggins in Brooklyn. When customers used it for a purchase, the bill was forwarded to Biggins Bank. The bank would then reimburse the merchant and obtain a payment from the cardholder. Most people use credit cards to make a big purchase and pay it off over time. So how does the credit card company make their money? If someone's just paying off a loan, what money are they actually making? The main way credit card companies make their money is on interest. They collect interest payments on people who don't pay their balance in full each month. Consider this. In April of 2014, the average American household held $15,191 in credit card debt. At the same time, the average interest rate on a credit card is around 15%. Say you began 2014 with a credit card debt level that was at the national average, and you're using a credit card that charges the national average interest rate. So if you're only making the minimum payment on your card, 6 months into the year, you will have already paid your credit card user about $1,100 in interest. This is not including your payments on your actual loan that you're paying back. Other ways credit card companies make their money is by annual fees, cash advance fees, balance transfer fees, and late fees. These aren't all of them, but these were just a few. Annual fees are fees that customers pay every year in order to keep their accounts open. Not all credit card companies charge an annual fee, but usually if your credit card offers some type of reward, you can see an annual fee. Cash advance fees. Users charge these fees when a customer takes a cash out of advance on their card. A cash advance is when you take your credit card to an ATM machine and use it just like a debit card to take out cash. Most run at 2% to 5% of the amount of the cash borrowed. Balance transfer fee. These are fees from when you move debt to one card to another. The fee is usually charged by the card you're moving the debt to. Most banks charge 3% of the total balance transferred. Lastly, late fees. Making late credit card payments is costly, not only to your wallet, but to your credit. Most credit card companies charge at least $25 for the first offense and $35 for subsequent late payments. Avoid making late payments on your credit cards at all costs. College students and credit cards. College students in America were taking on some serious loans through credit cards. They were in some serious debt. Recent studies show that the Credit Card Act slowed the rate of college students obtaining credit cards. Now, students must be at least 21 years old unless they have an adult cosigner or they are able to show that they have a significant amount of income to back up the loan. With the new Credit Card Act reducing the availability for students to obtain credit cards, the amount of student debt on credit cards has significantly been reduced. Here are some tips on how to keep your credit card balance low. Pay on time to avoid your late fees. If you don't have to pay late fees, you should be able to put more money on your monthly bill. Be on the lookout for new fees. Make sure you're on top of the fees that your credit card currently has and look out for new ones. Try to pay your balance off as quickly as possible to avoid taking on so much interest. The quicker you pay it off, the less interest you pay, which is the more money or less money out of your pocket in the end. Make sure your balance is less than 35% of your credit line. This will keep you from getting in over your head on your credit. If you have any questions or concerns, please leave me a message. Thank you.